Hey gang, welcome to the month in review. We're going to recap some of the trades that produced 72% win rate this last month, little over 1,200 pips net, and also take a look at some of the upcoming signals as well as the big New Zealand US dollar trade. We're going to start off right here in replay mode. I just want to show you something pretty cool that set up the high-to-high trend line that came in here on the GBP CAD. We had the low-to-low trend line coming in right here. So we had been in this sideways trade channel for the last 30 days. And again, this is where we want to move into our SR Specialist mode. Those of you that are members with us, SR Specialist basically means we want to trade the sideways channels, and we identify some really significant key levels. We use a combination of indicators and then focus on market structure. So we're going to be sellers against resistance, or what we call the offer zone. We're going to be buyers against support, or what we call the bid zone. But this is really cool right here. Some of you have traded high-to-high trend lines, low-to-low trend lines, and so on, but it's nice to watch these play out in real time. Let's get rid of the Fibonacci analysis. So anytime you've got an impulse leg right here and we pull back down and price starts to push, you can take your trend line indicator, draw from your swing low here to the next swing low here. Most of the time you need the two initial points, then you'd like to see a third test for confirmation. We can do the same thing with high-to-high trend lines right here. And this does a really nice job of giving you a quick hit visual look of how markets start to consolidate. So as I replay this, what you're looking for here is either a third test of the support or a third test of the resistance. And again, you can see this market start to compress and squeeze. So this contraction typically is going to occur right before we have some type of range expansion. Now, if it expands south, in other words, we break support here and roll over, we'd look for price to come back into that high-to-high trend line and then look for a sell. So it would look something like this to a new structure low. Then we'd look for this to pull back into previous structure support, now resistance, and a confluence of our high-to-high trend line and our low-to-low trend line. And then from there, take off and head south with a target down here at our bid zone. If we do just the opposite and we break above, then we'd anticipate a pop here to resistance and then a pull back down to this area of confluence where this low-to-low trend line shows continuation. So we're going to watch for one of those two things to occur. All right, so as we're moving forward here, you'll see that we press a retest of this level. Will we break above, close above, or find rejection and further contract? We break above, close above, break above, close above. So you can see right here, we make these what we call a new structure high. So previously we had these swing highs. We go to a new structure high, pull back down, high-to-high trend line extension, and then we retest that level. Now, it's a very nice trade. You can see here your 233 EMA is bullish and moving up. Price just confirmed a new structure high and a break above your high-to-high trend line extension. Notice right there, your initial test, we got rejection. So you can literally come back down here, place a buy limit here, and then a protective stop below the swing lows. In this case, in the pound Canada, let's just take a look at the size. If we bottom here and placed our stop below that low, you can see the 162 pips. If you bottom there and just went below that low, 70 pips. Okay, if we bottom here, we'd anticipate a retest of this level for target 1, which you see there's 100 pips, and then we'd look for a big extension of that level to go get an extended target. So that'll give you an idea of risk profiles on the trade. So here we get long right there on the initial test. This is a beautiful outside bullish engulfing candle. So let's take a look. Price bars are really significant and can help you in identifying strengths of moves. So you'll note right here we pull back down, we test the candle long here or here, and then on the next bar the low of this candle takes out the low of the prior, the high of this candle takes out the high of the prior, the close is in the top 20%, and the close trades above the prior several candles highs. So pretty nice opportunity here for to trail stops. So if we're long from this area, which is about 170.76, we close right here at 171.38. We've got beautiful profit in the trade, and that can be a nice little day trade. This is a 2-hour candle. Now, if I want to see more, I can go ahead and let this trade run. But you can see right there, once we see that we're up that 50 to 70 pips in the trade, stops can come to break even, cover half, and that's why on the position sizing and on the numbers that I'm going to go through here in a little bit right here, we always look at multiple contract trades. We call the first one the scalper, and that typically looks at 1R positions. We want our reward to be 1 times our risk, and then we use an extended target, which is typically 2 times or 4 times our initial risk. That's how we wind up with these equity curves here over the course of a 30-day period. Okay, so back into this, let's continue. Now you see that we're starting to struggle right here. We've got resistance at the 171.50. Look left, swing high here. Look left. We popped above, and then 4 hours later we were right back down into this zone. Clearly, we're finding resistance at that area. Okay, so we come back down. Here, as we pull back, opportunity to get flat right there on the retracement if our stops go to break even. We test our 233 EMA. And then right here, we pull back down to the confluence point. Now, this trade here, gang, I would consider to be a little bit more aggressive. This trade here, I like a lot. So let's look at the things that come into play, and you want to grab a pen real quickly. Okay. What we always do is we teach traders how to build that SOS, is what we call it. So SOS means strength of signal. So the SOS1 is the low to low trend line. We're going to add one more SOS with another technical indicator, and that's going to be the 233 EMA. Now we have 2 technical studies showing us that we've got an opportunity for a long entry here. SOS1 is going to be applied to the RSI at the bottom of the chart. When that RSI goes oversold, we hit an extreme oversold condition, then we're anticipating we could see a retracement. And then finally SOS1, which brings us to an SOS4 cumulative, is the horizontal structure support. So let's just call this support level. So you can see we have 4 different technical indicators or technical studies that give us confluence at this area. Low to low trend line here at 170.28, horizontal at 170.04, RSI's buried right here at 170.73, and then the 233 EMA coming in slightly higher. Now the final thing, for those of you that like candlestick analysis, you can see here this is a beautiful reversal doji. All right, so let's get rid of this. You can see it in real time as we have that point of confluence. Now there are multiple ways to enter. Number 1, we can buy it right here with a limit order. Place the protective stops below this low as you look left over here. Okay, so again, if we buy it here on a limit order and place the stops there, let's just call that 100 pips of risk. Now we know that if they do nothing more than pop back up here to retest that big level, we've got 130 pips of opportunity. So that's 1.3 times the initial risk. All right, now the other way to enter the trade is to take the swing high right there and place your buy stop above that area. And that requires confirmation. If we get momentum to return to this market and the buyers really come in, you can place your buy stop here at 170.41. Your protective stop would go below here at 169.70. And then again, we'd look for this market to retest this area. So 2 different ways to enter. The upside to placing my buy limit right here is that I don't have to watch this market. I've got my limit attached to a protective stop. I've got my buy entry limit attached to a profit target up here. And then obviously I can come back in and just manage it every 2-hour candle. All right, so let's continue from here. Immediate rally off of this level. And I want you to note, by the way, that these back-to-back candles, that's at 4 a.m. Central Time, 6 a.m. Central Time. So right here is basically when the U.S. market opens in foreign exchange. We immediately popped to 70.77. So from our original entry, we've got about 70 pips in the position. And then from there, we reverse, come all the way back. So those traders that couldn't get in initially here, opportunity to buy it there on the retracement. We pop again, and now right here, we get the trade above and the close above. So further confirmation they're going to continue the rally. Now I want you to note, RSI came off of those lows and is moving up above the 50, and RSI right here just made its highest high in the last 10 bars. Okay, let's continue. And then right here, as my candles start to turn, this is telling me that my bullish momentum might be moving to a point of exhaustion. So from our original entry, we talked about risking 100. You can see right there, we've got 150 in the bank. So we can take partial profits there. Now again, we've seen this low to low trend line. I want to tighten this down again so you can see this. This is really critical. You see that this is an ascending price action pattern. This double bottom preceded the impulse move here, here, and here. We pulled back down, but this time, rather than come back in and test the support like we did here and here, we stopped. Pulled back up here. So that becomes your first low to low trend line. When we got that third test, that's confirmation. And because it's an ascending pattern, the buyers keep coming in at a higher price, higher price, higher price each time. So this is giving us some clue to strength behind this directional move. So if we can take out the resistance here, we could be gone pecan straight north. Okay, let's continue. And you can see, just like they have previously, on multiple occasions we find resistance. So we've got a big round number right here in the pound CAD, 172. Now here's the opportunity to trail the stops if you're still long. Stops need to come in behind this little swing low right there. And it still leaves us open for opportunities if this market continues to rally. Now, what if we do continue to rally? Where might this market head? Well, here's the last swing low to new structure high that I see right here. So I want to take the value of this impulse move and I want to drop it in at the next swing low. So right here, I'm going to take this, grab this, and drop it in at this swing low. This shows us a one-to-one measured move come in around 172.70. So let's see if we hit it. Pull back, and then there we get the break above, close above, and we come right to this level. Now it looks like this thing could give us a really nice continuation move. From our original point of entry at the highest high here, you see we had 240 pips of opportunity. So this becomes a decision. For some of you, you prefer to just take it at that target. We're using market symmetry right there to identify that. Others say, I want to stay in this trade and see what we've got. We're taking out a big honking level. That's a technical term, big honking level. So let's see if we can get a continuation move above it. Here we get the higher high, higher close. Now it's an opportunity to start to trail the stops. And now what we'll do is I want to take this out of replay mode and take you right to what took place. Look at that move. Then we go here. We get another ascending wedge that you're going to see here. See that horizontal resistance? You're going to see here. Low to low trend line right there. And then when we take out the 173.50, we press really hard. We go parabolic straight north to 176.50. Now again, if you were trailing stops for the duration, your stops got taken out right over here at around 175 area. More importantly, look at this move. 550 pips available on that move. And everything started, gang, with an ascending wedge type pattern. All we had to do was take a look with our high to high trend line extension, our low to low trend line extension, and then look at the point where we had a confluence of technical studies. 233 EMA meets the low to low trend line extension, meets the horizontal structure resistance, resistance, support, support, anticipated support again. And then again, as we noted, our RSI was buried oversold. Turned out to be a really, really powerful trade for everybody in the group. Yeah, and some traders, you know, were happy taking the majority off here. Others took partial off here and then participated at our target 2, and then others take advantage of that big directional move. And keep in mind, gang, it's not a question of if we're going to get these moves. Too many people are too concerned about win rates. Okay, although the win rate right now is 72% for this last month, it's not going to stick there. But if we come in even at 65% accurate, but our average winners are twice as big as our average losers, these types of big winners are available almost every month in every market. Forex, stocks, futures, doesn't matter. The question is, when these do happen, will you participate? And the way to do it, obviously, A, have good qualified entries. B, have the ability to take partial off, pay the fear and pay the greed. Right here, as soon as you got that 100 to 150 pips, imagine that sigh of relief knowing you got money in the bank, and next, that you can trail your stops to break even or better, so you've got profits locked in on the balance. That's what allows us to participate. Okay, so let's go a little bit further. Now let's take a look at New Zealand USD. I popped this one out. We did the analysis last week, posted it for everybody. You can see here we had multiple attempts at that sell. Still short 20,000. We're getting ready to open here, and we'll see what happens right when we take off. So buy stops on half of the current short position has been trailed, and you can see that we're moving sideways at structure support. So I'm not willing to risk a lot on that. We want to see half this off at around 65.82. So you'll note that's around 100 pips of opportunity from the average price 66.84 entry. The primary reason on the sell side, typically we don't sell them against this this type of a bull move right here, but I want you to note, went back and did the analysis, and you can see here, had a significant swing high on the weekly that came in right here. So we had this big honkin' level, again, technical term, that comes in on the weekly. And the most important part is my indicator was telling me right here we're probably at the peak. So if you're long right here, caution. Number two, we had a massive reversal candle right here followed by an extreme sell-off. And then number three, as we approached on this last move up, you can see that we held the first pop, pulled back, put in this double top on the daily, and then made another attempt at it. So when we did it, basically this is an aggressive trade. Most of our clients that are not aggressive traders just stick away from that. Those that are aggressive traders will go ahead and reduce their size on that position. Either way, it's turned into a really nice trade. Now it looks like we could roll sideways here. Again, look left, there's that daily. So you see we're right at that level. And now let's pull it back down to the 2-hour chart. So right there, I had the qualified signal. When this guy starts to fire, we're typically at exhaustion on the buy side. Note here, RSI overbought. All of our criteria had been met. Look left, double top here, pullback. Right here, hit and held again. But we couldn't drop below that prior swing low right there. So that's where we sit right now. So New Zealand, Australia, moving towards target one. We've got pips locked in on this one. If we continue the rollover, we'll take half off here. And then let's go out to a 4-hour chart. You can see that the extended target's back down here at the 164 handle, which offers us about a 3R trade opportunity there. Okay, so that's New Zealand. Now let's go real quickly here. There's a 4-hour chart. Once we took out our sideways trade, the SR Specialist gang just crushed it in this sideways trade right here. Once we got broken out of this position, we had one buy signal here. You know, it was a small little winner, nothing significant, and then it just went parabolic. Don't fear missing these moves. There's not a lot that can be done. As of right now, we don't really have a setup. We'll go back down here to the hourly and start doing some analysis, so stay engaged. GBP USD, highly correlated, obviously. There's that exact same pattern. So as I was doing the analysis, I told everybody, watch for the pullback and get prepared. Low to low trend line, but you see, unlike the pound CAD, the pound US just took off and never looked back. USD JPY, this was a losing trade after we went 5-0 where we were sideways. But right here, we made a move to new structure lows, pulled back up. We sold them right there at the 105 handle with stops above those swings right here, and we got taken out as these stops were hit. So you see here we popped, and we didn't get any follow through right there at all in the 1 hour. So that USD JPY, that was a trade with trend right here. And again, we started to fire blue, like the sell side, and got taken out on stop. So that guy's all flat. US Canada came back down, tested our levels here. We got long, pulled part of it off right there with the scalping contracts, and then got taken out on the trail stop right here as we pulled back down. Now I want to show you right here on the 4-hour chart, pretty massive level. Look left right here. We held swing lows right here from June, beginning of June, popped back up, and again inside of this sideways channel, mostly a bearish bias right here, but just absolutely crushed it when those conditions were favorable for the SR specialist trade. Now, if we break out like we did on the yen, then we have to change our mindset a little and go back into a momentum or a trend following mode. USD Swissy took out a significant level. Now, I marked this one up big because I want you to look left at the weekly, similar to what we saw on New Zealand, but just the opposite side. This is from February of 2018, gang. So we came down and had consolidation for 5 complete weeks before we popped, came back into resistance. Look at this. Do you think structure works? Do you think this has relevance? It's just everywhere in the charts, gang. Everywhere. So we come back down, we go boom, boom, straight south, back-to-back weeks, stop on a dime right here at this 92 to 92.30 zone. This was during the Corona issue. Popped back up, found resistance again. Volatility comes out of the market. ATR, average true range, settles down. And now we go back down to the 2-hour chart. And then during this period here, again, just absolutely crushed it. Okay, so that was a sell with trend. This is a buy counter. Sell with trend, buy counter. Buy counter, and then long entry right there. We were stopped. Didn't quite get high enough to get a short right here. And then right here we got long, and as we pulled down right there, taken out on stops. Bottom line is we just took out about a 2-year low in the US Swissy, so this guy's got some room to run. So I'll do some analysis, be sure to stay engaged, and I'll show you where I think this thing's going. Finally here, let's go look at UR Swissy. So we pressed above right here. We retained that symmetrical double top and pulled right back down into this comfort zone, relatively tight area. We talked about where this thing was headed. Our 127 Fibonacci extension held that swing high. Again, just not a lot going on in the Euro Swiss. Okay, so we'll see if we pull back down to this. Be a little cautious of the 107.20s. If we roll over, I'd like to see a press here, then a pullback for a short entry in this area, and then see if we can go tag the 106.20 handle. If we break above, close above, I still want to be cautious because of the resistance we've seen here. Euro Yen, trade above, close above. Again, low to low trend line, high to high trend line. Look right here. Boom, there was our high to high. Look right here. Here was our low to low, and again, didn't quite get back down to it on the third test right here. Price is greater than the 233. RSI is above 55, and we come back down. Didn't quite get it. Went and retagged the resistance, just like the double top here at the 124.20s. This time, however, we pressed above, closed above. So let's take a look at what we'll look at here. Expand this chart. And let's grab our Fibonacci retracement. Okay, so here's the swing low that preceded the rally to that new structure high. You can see I've got a point of confluence. If we get back down to this 618 zone, I've got double top resistance, resistance, once broken, anticipated support. So let's watch that 124 to 124.20 level right here for a potential long entry. 124 to 124.20, that's on the Euro Yen. All right, so let's take a look at the month. What I did was just exported these out of the TradingView account. Started off, had a massive directional move right here. Very few losing trades. You'll see at the beginning of the month, 35 pips, 41 pips, minus 113, 87, minus 42, and then winner, winner, winner. And then right here, nice big winner. This was on the Euro USD and the GBP USD. Then we came back down and we went through a drawdown right here. A couple of markets broke out of structure, support and resistance levels. Biggest loss on the month was minus 234 pips. Biggest winner plus 221 plus 203 on those two. And you'll see here we pressed right here and we hit an equity peak at just around 800, followed by a 200 pip drawdown. Okay, then we go from 591 pips up here to 1,000, so we have basically a 400 pip rally, followed by a 300 pip pullback, and then close the month on nice new highs right there. Now, the New Zealand and a couple other trades were still open at the time. We do this based on closed out positions for the month. But again, right here, right around 1,200 pips, 41 contracts winners, 2261 pips total, 16 contracts were losers. And again, this is not positions, this is contracts. For 1,028 pips negative, so the net around 1233, 72% win rate. So again, be sure to stick around. Appreciate you watching all the way through. If this provided some value to you, please click that like button, and again, click down on that link in the description. You can start to watch some of this analysis, technical analysis, and some of these qualified trades and setups in real time. All the best to you in your trading. We'll see you at our next update.